Hey everybody, Don Durrett, Gold Stock Data. Coming out of Beaver Creek, I made 1911 gold my top pick at Beaver, and I decided to invite Sean on so you guys can see the story a little bit more up close and personal. And so we're going to let Sean show you some slides, and I'll ask him some questions, and we'll take a close look at 1911. So Sean Hendricks, the floor is yours, so you can share your screen and show us some stuff.
Sounds good, Don, and thanks a lot for having me. It's amazing what's been going on in the market even just since we met. It's things just nonstop. Um, Let me just bring up my screen. I think, as you kind of noted, 1911 is one of those stories that's been quite overlooked for quite some time, and it's really been this last couple of weeks where we were able to sit down with a lot of not, some of our peers, investors, new institutional investors, even at Beaver Creek in particular, and follow-ups that have happened since then to really kind of show what's all happened on this property and what exists, and what the potential is. So hopefully that can kind of come across here a little bit, and happy to come back on here anytime with you and do follow-ups as we progress kind of through everything that we're going to talk about, if that works for you.
Great. So
Okay.
go ahead and see
Uh,
if you can see if you can share your screen.
all right. I believe I am sharing it. Here we go. Let's see. There we go.
Yep, I can see
Good.
it. Perfect.
All right. I call it extended because there's a few extra slides in here. We won't spend a lot of time on some of them, but just to show you some of the additional things that we talked about, a little bit outside of the normal corporate deck. So for anybody who's completely new to the project, just to orient you, this is a fully permitted, fully constructed mill, a 1,300 ton per day mill located 3 hours north of Winnipeg in Manitoba, just on the western side of the Ontario-Manitoba border. It has three underground mines, past producers, all open. Most of what the work we're doing and what we'll look at is around the True North mine, which is the largest shaft mine on the property. But there are multiple other producers, even within the mine lease area, and then stepping out to other areas of the property out in the southeastern part that have significant potential to be also major mines. So keep in mind, everything you're going to look at here is already permitted. This operation ran up until 2018 in the underground and then ran right through to 2022 on the mill. We were retreating tailings for a while and actually doing that quite successfully at first at lower gold prices. So some part of me wishes we would have hung on to that instead and done it now, of course, but you can never predict the market. This is a mill that currently is 1,300 tons a day, but has the ability to grow in terms of scale. It can go up to 2,250 tons a day with additional crushing capacity. So as we bring other mines on the property online, this is something that can grow with those properties and be able to take all that in centrally located on our property, and within 20, 30 minutes of all the other areas we're currently looking at outside of the mine area itself. The mine that we're focused on right now has a 1.1 million ounce gold resource in it. We remodeled it quite recently, so that's a very recent update. We've been actively drilling two new target areas around that mine, which expand next to it, and to Don's previous points on us, represent a very significant uptick in their production potential within that mine, as we continue to drill those out. Primarily because they start higher up, so you're starting to mine ore closer to surface, bringing it to the shaft at higher levels, which increases your throughput coming out of the mine. And then following that, you've also got all the potential that's represented by the other mines that are sitting there waiting to be developed and rehabbed on our site. Large land package, you also get exposure to 62,000 hectares of greenstone belt, all consolidated under 1911, no royalties, and there's no debt on this property. And we have very good social license here in terms of community connection, local First Nations groups, very excited to see this coming back online. Province is a great jurisdiction for resource in general. And we also have one of the lowest cost of sources of energy, hydroelectric line coming to our site, with much of what we're doing really run on electricity. When you're in a shaft mine, a lot of that underground is really run off of electric power. So we can tap into that. Great shareholder base. We don't probably need to spend a ton of time on this, but Eric Sprott's a big shareholder. Came in again, very supportive, not because he likes the mill or the infrastructure, because he sees the potential in the resource. The last time I sat with him, we tried to show him all the economics around the mining, and he just said, "How big is it? How big can it be?" And he said, "See, I told you." And how much is this trading for? And that's basically it. So, a man that sees the growth and the size, and a particularly good, strong bull market, is in this stock. We also have a number of large institutions in here, and an insider ownership there. All our stock as management has been bought in the market or in private placements or offerings that we've done in the past. So we're all in there at that 30-cent price raise.
Sean, uh, pause for a second there. I just want to highlight the fact that your insiders are very large, and that's very significant because your low valuation makes you very vulnerable to a takeover, but yet you're not vulnerable because, I mean, if you add up those numbers, you got high net worth at 16, plus Eric is 33, plus strategics is 43, plus insiders is 48. I mean, basically, you're not for sale. You're going to build a large company. I just wanted to point out how important that is. Go ahead.
Yeah, no, that's a good point. It's something we thought about a lot, particularly in the last couple of months when, you get the sense that there's more eyes on what you're doing. It's important to us to protect ourselves so that we're able to at least create the value we think we can create here before anything was to happen to the company. We'd all obviously love to operate this to where I think you unlock the greatest potential for upside on this project, and see how far we could take it. Keeping an open mind, of course, I'm not an obstacle for doing things that are beneficial to the shareholders. But we do have the right protections in place in terms of a concentrated shareholding within those groups. That's a very good point. Strong management team. We're about to make some more changes here. We're going to add some more technical people at the top. So we're going to be deepening the bench, all with the right skill sets. We've got a nice broad spectrum of people on here that have worked in operating mines and been involved in discovery as well as development. So good, strong team. We'll look to make some more changes here in the near term. We kind of touched on this earlier, but in terms of setting this is one of the better settings you can find. We sit in that Bertucci Greenstone Belt, just 100 kilometers to the west of the Red Lake camp. We own the entire area, quite similar to what Evolution has over there in terms of size, but everything's consolidated under us, vastly underexplored, particularly once you step out of the mining lease area. So there's lots of open ground, which shows significant potential for major deposits elsewhere on the belt. And it's just to zoom in here. You can see the road infrastructure. You've got the hydroelectric power line coming in here right through to the site, over 30 megs of electricity on that line. You see all the historic gold producers here, all these these yellow dots represent areas where there's historic shafts, historic production. So it's not just about the mine lease area, which is right here. This is the key part of the story, but there are also a number of areas where there are, significant potential for down dip extensions of those mines. They're only really down to 120 to 130 meters below surface when you look down in this area. So nice high grade, and you get a big repetition of everything up here down into this area. So that'll be phase probably 3 for us getting down there. Phase 2, we're going to be expanding some areas around the mine lease area where we see nearer term potential. But in the background, we will be drilling these areas up. We've got a resource there, which I could show you quickly. So we do see some big potential there in that kind of 3 to 5 year time horizon.
Can you go back to that slide?
Yep.
So, I mean, one of the things that's exciting about your story is the True North mine, a little over 1 million ounces, but you have this additional resource, this Ogama Rockland resource here, and you have a bullet here. Yeah, they're right
Yep.
there,
Yep.
which is, high grade, 300,000 ounces at, about 8 to 11 grams, right? So it's
Mhm.
very high grade, and it's not going to take much for you to drill that out, expand it, and add it to the resource. Is that correct? Add it to the
That's
mill.
correct. Yeah, yeah. No, it's a shallow mine, less or it's a shallow deposit. It's less than 200 meters below surface right now, so it is wide open at depth. We do think there's some step out potential around there as well, so there's probably some size. It's high grade. It sits in an area which is a bit different than the True North mine and some of the other central Manitoba area projects. These ones, and that it sits more in the volcanics, so it's likely to be harder, which typically means more crushing. But the grades, the grade will definitely hold up and pay for any additional crushing that we have to do on that area. And I do see that, like as you said, probably a 2 to 4 year time horizon on getting that up and going. Two if we're pedal to the metal, and three is probably the realistic, and four is the outside shot there. But this is off the mine lease area, so there will be additional permitting and stuff like that. So we're going to go through a bit of a round of that when we comes to developing that mine. But you can see it sits right on the road. So it is road accessible. This is about a 25-minute haul distance from that area. You'd pre-crush down there and send up crushed rocks, minimize the amount of trucks running around on the surface. Yes, this will be an easy one. And then there are multiple other much larger targets elsewhere in that near vicinity. You got Central Manitoba, Gunner. You got this Garner deposit down here. You got Bidou, which was an exploration project for us. We think that's probably a True North lookalike. So we think we got multiple shots on growing the production profile here. So it's
Yeah. One comment I want to make. So I always say you make your money on the second mine, not the first mine. But in your case, you're so cheap that we'll probably get a 10 bagger just on True North.
yeah.
And then we'll get another 10 bagger on these other properties once they go into production. That's the way I look at it.
Mhm.
And potentially much more than that, more exploration underground, price of gold going higher. But the potential is pretty phenomenal from where
Yeah.
I'm sitting.
Yeah, this market, I think those are probably, yeah, pretty fair comments. I think, when you look at what's going on the cost side as the gold continues to move up, for us, cost is largely uh, not variable, like it's more fixed. You've got that hydroelectric power, that's a long-term rate. It's not going to change just because gold price went up. You've got people. People's obviously going to get a little more expensive, but it's not going to close the gap between the gold price and your costs. And then after that, you're starting to look at other fuel inputs and stuff like that, and those have been relatively static. So, other than dealing with the ongoing of steel tariffs and those kinds of impacts, I don't expect, and that's minimal here because it's already largely constructed. I don't think that's going to have a big impact. So I think you're just looking at the pure margin on that resource, and you're looking at, 1,200, $1,500 an ounce margin for every ounce you pull out of True North. And yeah, you get your ten times on that. And then you start to expand it out and grow the profile with the other project areas. Take that same multiple, and yeah, it becomes a much bigger company.
It shows me how early we are in the cycle that your valuation is so low. You're trading about 42 cents US today.
Yeah.
It should be easily a dollar in my opinion. When you look at, I mean, the only thing that doesn't keep you from going to a dollar is if gold just literally collapses. And I don't see that happening.
Yeah. Yeah. No, no. I had the same conversation with somebody. It's like I don't know what world we're living in where gold gets cut in half in like in a short period of time. It's everything is pointing to money printing, stimulus, interest rates going down. People are struggling, and to get people out of that, you have to stimulate, unfortunately, and stimulate means devaluation. Uh, and just the whole security aspect right now too for gold. It's a big
Right,
deal.
right.
Anyway, uh, we don't have to spend a lot of time on this, but just when you're looking at this, keep in mind everything's fully built, fully operational. You've got all the infrastructure on site that you need. Everything's in place. We have that group still on site that's using some of our excess power to mine Bitcoin. So it's a nice little side thing for us where we make 500,000 a year off of that. We'll continue that on for now until the point comes where we need to draw that power ourselves, but it does keep us, keeps the holding costs down. And this is a big geology map here. I'm not going to spend a lot of time on this either, but this just shows you how the discoveries on this project are made. You've got these east-west shear structures, the blue dotted veins, and just think of these as corridors for gold mineralization to travel through. And whenever it hits these host rocks, which is the green shoreline and the brown San Antonio gabbro, you tend to create large deposits because those are porous, they're reactive, so when the gold from those shear structures hits those rocks, it tends to spread out quickly and form 16 type, or sorry, 32 type veins, these stockwork veins as it kind of moves through the rock. So you get these shear structures intersecting the rock, high grade, steeply kind of dipping to the north slightly. But then you also get all these stockwork veins spreading out from there, and those are more what were mined historically. We've been drilling the mine sits right there. And we've been drilling this target area here. We're looking to step out and drill this one down here. This comes from the 007 mine, which was a pretty big mine back in 2010 through 2014. So clearly there's going to be something happening here because this created a lot of, a big gold deposit here and it's not been tested where it hits the San Antonio. And you've actually got another shear that you can't really see here, but it comes in just underneath here, right here. We also think that's an exciting one for us to be testing. And ultimately, the idea is this is all stuff we can get out from underground. This is going to extend and expand the life of the mine, also create opportunities closer to surface within the mine. And then you've got San Antonio West kind of now moving in the opposite direction, going to the northwest. You've got that deposit or that new discovery we've been drilling out there, and that comes right into the mine from the other side. So now you're looking at, on one hand, you're spreading out in the one direction, and on the other hand, you've got something coming towards the shaft and towards the mine. And then there's actually a whole new mafic down here, which we've not tested at all because you can see it goes off our property. But this comes into our property at depth. So this is another target eventually we will be looking to test. So to your point, this is something that can grow a lot just on the mine we've got right now. And then you start layering on all these other opportunities and it becomes something kind of very significant. These are the two areas on surface. We've actually completed another 5,200 meters of drilling, extended these down another 100 meters each. So this one now comes down to about here, and this one comes down here. And you'll see this week we'll have an update on our underground drill rig program, but that's about to start. And from there, we'll be extending these even further, and we'll be doing infill drilling around these resources. I put these resources on this map because these are the ones that we see as near mine, near-term production potential. This L10 zone here and the 710, 711. These are areas we'll be mining in the near term. These are also the areas where we'll be doing a lot of our resource extension and expansion drilling over the next 12 months. So these are going to come in, very soon. There's about 310,000 ounces here. This is about another 100,000 ounces. And you can see it sits right on the mine infrastructure. So when you're looking at what's it going to cost to get to these deposits, it's not going to cost anything. We're already there. We need to ramp. We need to put the stopes in, and then we need to start taking ore out. And I think, when we spoke, the thing that you liked in particular was just this potential for these two upper areas to increase the overall throughput coming out of the mine. And the way that works is as we drill these out and start to add these into resource and complete infill drilling, and keep in mind, there's also another one out here that's never been mined. It's coming in. This one's now within reach. We start bringing ore from here. We start mining ore down here. We mine ore from 16, 26. We bring it over to the A shaft. This is about a 3-minute distance to surface. But if we start mining these deposits up here in the next 2 years, then you're actually dropping it into a loading pocket that sits higher up, and your distance to surface is really like a minute. So what takes you, 1,000 tons a day from the bottom, you're now talking about 2,000 plus tons a day. So you'd be combining it. So you probably wouldn't be taking it all just from one area, but you would be looking at a significant ramp up in production from the underground, just from the shaft mine. And then we start looking at the ramp mines, which are all sitting kind of floating out here on separate host rock areas, bringing those in 200 tons a day from Hinge, 100 tons a day from Cohiba, 200 tons from 007, which is that big mine right here. And you all of a sudden you're bringing in another 600 tons a day from the satellite mines. And then you start thinking about the other exploration opportunities within first the mine lease area, because there are other mines there, and then look at the regional and start layering on those high grade ounces from the regional areas. And this is just another look. You could see the downwards extension potential of those two targets. This one's wide. This is the west. It's just wide open. There's no drilling. You can see it comes into the infrastructure. So it's actually coming into level 16, level 26. The old timers kind of followed. There was two different shear structures that led to the original deposit. One was the Hinge, and the other one was actually Cohiba, of all things. And they kind of come out this way, so they were actually following them out here, and they left behind. They never really followed up, or looked back to see what might be within reach from the development behind them. There's other shear structures coming into the mine area, and then you've also got that Cartwright deposit. This is 100,000 ounces sitting here, and it's open, and it's also coming in the same direction. We've actually got levels coming off the A shaft to the west. So there's more development needed for these ones, but not as much as you would think. We've got a couple of large levels that go this direction. We can rehab those. We'll rehab those initially for drilling, and then we'll upgrade those for mining. And then we'll start bringing ore in the higher parts. So that's where that big ramp up in production potential comes from. It's where you go from being 50, 60,000 ounces to 80, 90,000, and then you start to push over 100,000 ounces as you bring all these different areas online. And when you're talking regional, then you're into the 150 plus thousand ounces a year. And I don't know where that stops, to be honest. The potential is quite a bit. And this is just the same. Now we're just looking at a long section, slicing the host rock along right in the middle, and then looking at the mine from the side. And you got the same reserves that I was showing you earlier, resources. You see the downwards potential. Again, they followed it out this way, but the actual areas down here had intercepts that were never followed up. So these sit outside the resource. These are all above cutoff. These are all decent high grade areas. Actually, you can see a few over here. So these are areas we'll be chasing. If you can start bringing more ore in from this area as well, you've just blown up your whole underground mine in this property. And it's just upward or potential. This is that southern gabbro that I said's never been drilled. And you can see it comes right into our A shaft area. So off our property around here, but comes into our property right around here. And then, so this is all accessible, blue sky kind of potential from the existing underground mine. And these are a bit detailed, but I think one of the things you wanted to talk about was just where is this all going? So over the next 12 months, our plan is, look, we're mobilizing drill rigs underground. We've got one coming imminently, another one coming in October, a third one probably in November, and we'll look to add a fourth early in Q1 of 2026. That's all going to be designated for resource expansion, following those two exploration targets, hitting some new exploration targets underground, and then completing a large delineation drill program around two bulk samples in the underground. We've got our eye on two areas that we think they sit right in this area here off of level 16. They're both pretty high grade. We think we can get into those by the middle of next year. We'd be mining those, testing them through our mill, reconciling the grade as you would hope and expect back to the resource. So we'll be proving up our recovery. We'll be proving up the grade of our resource. We'll be proving our mining methods. And we'll actually be producing ounces on the property in 2026. And we'll probably be producing around 14 to 15,000 ounces. So it's not going to be small. It's going to be a big test run. And we've been gearing up for that, and we'll continue to add people and get people ready to go to get prepped for that area. And then you can see here, this is the bulk sample kind of projected in this area. The reason there's a bit of a lag in the revenue is there's a process of mining, stockpiling, and starting up the mill, seeding the mill a little bit so that you're not putting your best stuff through first, and then slowly getting the mill going. Once the mill is rolling, it'll go nonstop until it's done, and we'll have everything done by kind of October, November, and be selling gold throughout that process. I need just a kind of a quick look. This is level 16 kind of coming in here. And these are those two bulk sample targets. This is the L10 sitting right here. We've got it right now at around 52,000 tons. We need to do some drilling here to confirm exactly what's there. There's a couple of small holes right in the middle here. So we need to put a couple of quick holes in there, and then we'll start a full delineation drill program following that. And then the second one is the hinge target here. And you can see the ramp design coming up here with the ventilation and stuff in there. And this one's simple. It's one vein. This is two veins. This is one vein here. We're going to put two holes in there right away. And then we're going to wait for those results. And then we're going to come back and complete another 5,000 meters of delineation drilling on that one too. So that's all planned for the next 3-4 months. And then yeah, this is a little bit more detail on those. I'll just move through those, and then just look at it. The regional setting is there. This is a slide that tries to explain what's happening here. It's all fluid flows. You've got your major fault structure, the Wanapagao fault up here, and then you've got the Manigatogan fault. Seems to be controlling all these secondary faults that kind of flow in around here. You've got this volcanic pluton in the middle, which is putting pressure on all the faults. So you can see everything's bending around it, and it's forcing the fluid to either end. We actually think there's some potential for in this area still too, because it's highly likely there's some good intercepts, there's some good drilling to be done there. But a lot of our focus is in true north, sitting right here. And then secondary being down here in the central Manitoba area, southeastern part of the property, with Ogama Rockland sitting right there in that area. So that's what is driving the geology here. The secondary structures folding around this pluton, gold mineralization throughout. You can see here lots of drilling, lots of surface samples. So we have a lot of results to work off of. A good start. This will be, a near-term project. Ogama will be very near term, and then some of these other target areas will be even sooner. So once this areas down here start to come into production, you're looking at a big ramp up in ounces produced on this project. So that's where it'll really move into a different category. And this is just the Ogama resource. We remodeled all the veins, and you can kind of see it's very narrow, but it is very high grade, and you can see it's pretty dense. So you would be probably mining this underground. There is some underground infrastructure here. We'll be updating this and getting it into the next resource update as well. And that's kind of fairly detailed, but not too detailed. We are pushing ahead on this PEA right now. We're looking to have this PEA done by the end of the year. We've guided towards early, Q1 2026. So it may be that the report comes out ultimately in the new year, but we should try to get most of it, that initial release off here this year. And we'll have drill rigs very active in the near term, and we'll have updates probably starting in January, February of next year regarding the development, and pushing that ahead and starting to put some numbers around how that will look. In terms of the long-term mine plan, we've put together our own mine plan. We've taken that resource that we've already got, and we've been able to put a very economic mine plan around it already. We didn't go for everything. So there's 1.1 million ounces sitting there. We're chasing, just as part of that preliminary plan, about 550,000 ounces, but the average grade of that is around 6 grams per ton. So our plan as a company is to focus, not really on production, but focusing on profitability. So chasing the grade, focusing on areas that are the most economic without leaving, making anything sterile. Obviously, gold price is going to change economics as well. But we are trying to show that this thing's resilient at all gold prices. And that'll be a big part of the focus when you see the PEA. We'll be making sure that it shows and reflects that approach to mining. But there is obviously a lot more. You could go for everything, and would raise your costs per ounce quite a bit, but you would get a lot more ounces in the end. Our plan really is to put this preliminary plan out and drill as much of that resource as we can to improve the economic and the size potential of that mine plan instead. And so there will be obviously a big revision between the PEA and the preliminary feasibility that's likely to come out at the end of next year. So expect that coming. We would have a good mineral resource update in between as well, just to reflect all the drilling that we've done and make sure that our investors have a sense of the size of what we've done and what we've accomplished with these two new targets and the resource expansion drilling we've done. All right. Is there anything else, Don?
Okay,
Or?
I guess it's my turn. So first thing I wanted to mention is the hydroelectricity. That's a really boon for you guys because a lot of companies are going to be kind of at risk for higher oil prices, which I think are coming. So that's a real boon for you that investors need to recognize. Um, Now, I don't think you're doing a DFS, right? You're going to do the PFS, and then from the PFS, you're going to go straight to production. Is that correct?
That's correct. That's correct. Yeah.
Okay, so that's fantastic. So we,
Just because I've had this debate with a few people, but the main reason is when you already have it all built, um, you don't need to focus on tightening up the cost variance as much as you would. Like you do the DFS to bring that variance way down, whereas the PFS has got a slightly larger variance from actual built into it. And when you're already built, you don't need to do that level of de-risking because
yeah,
everything's already there. Yeah.
absolutely agree. So, will there be much additional? You're going to be drilling all year, so your PEA is coming out in Q1.
Mhm.
Is your resource going to get larger in size between the time you do the PEA and do the PFS, or is the PEA pretty much going to have the full resource?
No, there will be so there will be no increase in the resource for the PEA, but between the PEA and the PFS, there will be a sizable resource update because we've done a lot of drilling on those two new discoveries. We're having conversations now about how much should we drill them out for the resource update. The challenge you've always got with particularly with underground mines, is they usually don't have the largest resource or indicated resource. Usually have a larger inferred because the level of drilling you need to do to bring something to measured can be quite significant. So most producing companies in particular focus on just doing a level of confirmation that they feel comfortable with, and then when the time comes when you're like, I need next year's production, then you drill it out. That's why you often see these companies with, well, these guys always have like 2 million ounces and 900,000 measured or whatever, and that's just they're always that way. And that seems to be common. I'm not saying that's where we'll end up. We're obviously shooting for more size than that, but
Uh,
that's the reason and the rationale is just the cost of drilling something out when it's not going to be in production for 2 to 3 years. Why don't you just leave it there, drill it out when you're a year away?
Right. So another thing that investors are missing is the fact that you don't need very much cash to get into production. So you
Yeah.
have about 15 million in cash today, and you're doing this bulk sample with 15,000 ounces at $3,500 gold, I think is a pretty good target. You're going to have about 52 million in cash in revenue. Um, and at current margins, that's about $20 million in profit. So
Yeah.
15 plus 20 is $35 million. That pretty much covers how much money you need to get into production in Q1 27, correct?
Yeah, that's correct. I think what will likely happen is because there's always timing. Like that money is going to come in later. So what we would do is we would probably look to do something where we can pay it back pretty quickly when we get to that stage, just
I
because of
yeah,
timing of costs. But yeah,
I would really like to see you guys borrow some money. I mean, you don't have any debt.
yeah,
Your free cash flow out the gate is going to be significant. I mean, we're talking 1,200, $1,300 margins. You're going to be generating a lot of free cash flow right out the gate. I'd love to see you guys borrow some money. I mean, borrow $25 million, put it on your balance sheet, or get it,
that's
you could
that's the
have
magic number. Yeah,
you
that's
could
what we're,
you could go to a
yeah,
bank and say, okay, give us a line of credit for 25 million. You actually don't have to borrow, just get a line of credit for 25 million, right?
yeah,
It's
yeah,
just sitting there. If you need it, you use it.
yeah,
And that way you don't have to dilute your shareholders. I'd love to see that. 25
yeah,
million bucks is nothing. I mean, you guys are going to pay that back in one quarter.
yeah. No, I mean that's how we look at it too.
All right,
Yeah,
outstanding. So
yeah.
that's massive benefit. Um, so I like the fact that you guys are going to start at high grade. It's basically a 4 gram mine, but you're going to start at mine at 6 grams, try to mine at 6 grams. Even if
Mhm.
you're at five, it's going to be fine. So you're going to do that for at least 5 years. That's a long time.
Yeah,
And so the one thing that's going to drive the value of your company is your balance sheet. So people, they're not going to, a lot of investors are not anticipating what's going to happen with your company. Everybody's thinking short term. Nobody has any vision. Nobody has any courage to invest for 2 years down the road. But I think the middle of next year, we get to the middle of 26, you're going to be less than a year out from producing.
mhm.
So about June of next year, you might have to go all the way to your PFS, but in the summer of next year, your stocks should just start ripping higher as people start to recognize what's happening. Everybody's blind blind to your
Yeah,
story. So once we get to 27 and you basically you don't have any debt, so if you borrow any, it's going to be gone. So you're going to have $100 million on your balance sheet fairly quickly.
yeah,
At that point, you're not going to be able to spend, as far as drilling goes, you're not going to be able to spend it fast enough. So you're just going to start accumulating cash at that point. At what point do you basically say, okay, guys, we basically built this mine, it's working. Let's go look for another play in the area.
hmm,
I mean, doesn't that come into play when you get 200 million, 250 million cash on your books? At that point, you start thinking in terms of, okay, we we literally because we have like 40% plus insiders, we can do whatever we want here. No one's going to buy us out unless we think it's accretive, and we can build our company. Now we have the potential here to build our company larger, right?
yeah.
Let's go and look for opportunities to use this cash. Let's go buy somebody up. Is your board thinking like me down the road to that opportunity?
We are. Look, it's as you said, the time to do that is when you've got your own project working as it should be. You don't want to become distracted. We've got a pretty big prize on our hands right now. It's a pretty high bar for another project to meet kind of our expectation. And I know a lot of us say this, but yeah, when you're at that stage where you're operating as you designed, your cash is you know healthy, and you've got visibility into like cash flow coming in, more predictability around that production profile, then you're certainly going to be looking at projects out there that are late stage development, early production but undervalued, or just things that are similar in nature, so you can leverage your
Your balance
your
sheet.
people and your technical skills, and yeah, definitely your balance sheet
Well,
at that point.
the
Yeah,
the irony is, I see a lot of companies that build mines, and they're content as heck. They don't do acquisitions. They build a mine and they just cash cow
yeah,
it. and just
Yeah.
keep doing it and doing it and doing it. There's muddle along, muddle along, muddle along. So
Well,
there's some companies that are content with cash flow. Or work everything's fine because the reason why they're content is they're not aggressive, but there's always risk. Like we got a good thing going here, man, right?
yeah.
There's always
Yeah.
risk if you do an acquisition because you don't know if those acquisitions are going to work. So it basically is it comes the difference is are you an aggressive company or you're a conservative company? And one example is like Jaguar Mining. Um, they've been content as heck. We'll just keep mining our stuff, just plodding along, plodding along. No acquisitions, right? Just plod, plod,
Yeah.
plod. But now they have a new CEO. The new CEO came in and he goes, heck with that strategy. I want to do some M&A, right?
Yeah.
So that
Yeah.
gets
I've
me
met
all
him.
excited. So that gets me all excited, right?
Yeah.
So that's
Yeah.
what I want to see with you guys. I want you guys, to basically, but again, you got to get your feet underneath you. You got to build your mind. But after you build it and you get that cash, it's like, okay, let's be a shark here. Let's go and eat some. Let's go gobble up some of these guppies, right? Um, and that's when your company can really grow into a very large company. I think that I forgot to do this. I need to do one thing
Hmm.
before we sign off here. I'm going to share my
Yeah. Yeah.
screen.
Sure. Yep. I would just
And
add one thing to your comment. I mean, there's things to do corporately too, where you look at whether or not you're buying back shares or doing any kind of special payments. So, like, we'd evaluate a lot of different things when we're at that stage. But growth is the focus.
right. So if we look at the valuation of your company, $125 million for what you guys have, I just think is really it's really cheap. Trading at 42 cents. I have the insiders at 30%, but actually what you showed me, it's actually much higher than that. So
Mm. Yep. Yep.
I mentioned earlier you have 15 million. I'm showing you at eight. So is it
Yeah,
how
that
much Canadian do you have?
uh the 15 is Canadian, yeah. So
Okay.
yeah, so it'd be
So it's
around
about 10 million
12.
US.
Uh,
But bottom line is you're going to add another 20, so you're actually in pretty good shape.
yeah, yeah.
Um, so I use $5,000 gold to value companies. So I'm valuing that as a 120,000 ounce producer because I think you're not going to get there in phase one, but when you expand the mine, I just think I'm not going to value it you're going to start off somewhere around 60 at 6 grams. You're going to start off somewhere around 60 to 70,000 ounces a year, right? At 6 grams at 1,300
Yeah,
tons.
yeah, yeah.
Yeah. But for me, that's too low. I'm not going to value there because I think you're going to expand the mill, and I'm not a short-term investor. I think you'll get to 120. So at 120, see your free cash flow is $300 million, which is only less than half of your current market cap. I actually have you valued as a 35 bagger. I actually had you valued a 50 bagger before Beaver Creek. Uh, but
Yeah, I got some appreciation.
I'm gonna show people where now I have a tool. I'm gonna show people why I have you as a 35 bagger, and we can play around with this tool. So you're not going to dilute very many shares. So you currently have 251, and I don't think you might not even dilute again. You might even buy back shares. It's like, why do you need to? Do you see any reason why you're going to need to dilute very much?
No, not very much. We're obviously,
So
yeah, we're doing something now, but it's that's probably going to be it. So it's
yeah,
yeah,
so
yeah, it's pretty minimal.
10% would be 25. So if I just do 10%, I'm just going to use 10% and I'm using 15 multiple. I actually think your company is going to get better. I'm going to take it to 18. So I'm going 120,000 ounces, $5,000 gold, and I have you at $2,500. So I'm going to bump that up to 2,700. So this is like 3 to 4 years down the road. So that would be about a $2,000 ASIC, which I think is very conservative. And now I'm going to hit the calculate button, and it shows as a 40 bagger, 42 bagger. You're currently trading at 42 cents US. I have it going to $18. Now, this isn't crazy talk.
Hmm.
If they only dilute 10% and they get an 18 multiple, now what you going, Don, how in the heck are they going to get an 18 multiple? Well, they're going to get an 18 multiple because of these high margins, $2,000 margins in tandem with location. They're in Canada. They got to get to 120,000 production, but he showed you um, if we just do the math here, they're going to expand that mill to 2250. And we're going to do that, and we're going to do times, and we're going to use 5 grams. And then we're going to divide that by 31. So this is how many the ounces they get per day times 355. I just like to use 355. That takes them to 128,000 ounces a year at 5 grams. So
Yeah.
for me to use 120,000 ounces, it's not a stretch because they can easily fill up that mill at 120. And that might not be where they stop. That's just expanding the mill to 2250 at 5 grams. Now, if they go 4.5 grams, it's probably closer to 120. So I actually have a little bit of room for error there. And now you guys see why this was my top pick at Beaver Creek. I mean, this stock is just silly cheap, and it just checks all the boxes. High insiders, highly economic, good location, good management team, nice pipeline. I mean, I like to put, I like to rank all of these factors, you know, to come up with an overall valuation of a company.
Yeah.
And so you try to find kind of weaknesses in the company, weaknesses in the story. And with True North, I mean, I'm sorry, with 1911, I mean, good luck finding a weakness with this company. And it's trading as a 40 bagger still. I mean, I had this thing as a 50 bagger when it was at 23 cents.
Yeah.
And now I have it looking at, I mean, if we adjust some of these values down, it's still crazy. Let's take it down to 100,000 ounces and let's take cost up to 3,000. Let's be uber conservative and let's run this calculation. It's still a 30 bagger. I mean, that's pretty
Yeah.
insane, isn't
Yeah.
it? It's
Yeah.
absolutely insane. So I wanted to share the story with people. I want everybody to realize because a lot of people were like, okay, because this thing actually gapped up on Monday after Beaver Creek because I had it ranked number one.
Yeah.
It
I
gapped
think that was,
up, it was up like, 30, 40%. But then it stopped. It didn't do much on Tuesday and Wednesday. I'm like, this thing should still be ripping, man. Uh,
yeah.
So my point is that if you haven't bought this yet, it's still cheap. It's not, I mean, well, I showed you, it's like 30 bagger conservatively at 120 once they expand that mill. I probably should have ran it. I probably should have ran it at 70,000 ounces, but it's still 10 bagger all day long just in phase one. But we're not investing for phase one. We're investing for phase two. You do not want to sell this stock until they expand that mill. It'd be silly. You don't even want to take half your profit. You want to wait for them to expand that mill to 120,000 ounces a year and then see where the gold price is. But this is this is definitely, I've been doing this for a long time. I have never seen a slam dunk 25 packer in my life. Like I was telling Larry Lepard, who I consult with at Beaver Creek, I said, I can't believe I found two basically easy 25 baggers at Beaver Creek.
Yeah.
Um, I should tell you guys the second one. There was two of them there. The first one was 1911, and the second one, I guess I can let it out since you guys have spent almost an hour on us here. The second one was Talisker. Talisker, if they don't get taken out, now the problem with Talisker is they don't have such an easy path to production. They have some work to do. But the other thing about Talisker that they're missing, I remember, is you have to check all the boxes for where the weakness is. The issue with Talisker, they don't have enough insiders. So if New Gold says we want to take over Talisker, they're probably going to take it over. There's not much the board can do to stop it. So Talisker looks fantastic. So Talisker actually is a bigger deposit than 1911. Talisker can actually expand production to 200,000 ounces,
Mm,
which is going to
yeah,
be difficult for you. I think Talisker could easily get to 150,000 ounces, but it's going to take some work. It's going to take some time. It's not just a slam dunk. Whereas 1911 is just kind of A, B, C, D, and just boom, it's achieved, if you will. But
yeah.
Talisca's got work to do, and they don't have high insiders. Um,
Risk,
but
basically.
but
Yeah,
but it
yeah,
looks like an easy 25 bagger as well. Those were the two stories that kind of shocked me at how much upside they had. Um, but I think, Sean, I'll let you. Do you have any closing thoughts there before we close this down?
Thanks, Don. I don't know, hard to follow, but well, my one comment on Talisker is we are very, anxiously watching their ore sorting activities there. They're very similar types of deposits, really, and so their success really bodes well for anything we might try here. If you minimize the amount
You
of
know
waste
what's
going around the project, the
you know
economics just take off. So,
you know what's fascinating is you would in Talisker would be an ideal merger because you would protect them. You
yeah,
would protect their shareholders. So both of you guys are 25 baggers. So valuation wise, it's a perfect fit.
yeah,
And then you can help them finance their growth because you're ahead of them.
yeah.
You're basically gonna have more free cash flow than them. Well, actually, they go to 50,000 ounces next year. They're very vulnerable to a
Yeah.
takeover attempt. Well, you fix that problem for their shareholders.
Yeah. It's a nice
You
project. Yeah.
That is a really good combination, your two companies. So you might mention it to your board, give them a phone call. Um, it's not gonna reduce your upside.
Yeah.
I mean, you basically print as a 25, about a 30 bagger, right? But they do too. So it's not like you're going to reduce your upside. And plus, it's better to have two operating mines. If you have a
Oh,
problem,
always. Yeah.
if you have a problem at one mine, the other one's still running.
Yeah.
So it it could be a real win-win for you guys. So mention it to your board. And
Sounds good. No, those are the kind of metrics you look at when you're deciding on your M&A dance partners for sure. Yeah,
that's the only M&A dance partner I really see for you guys at this time. That's the only one.
yeah, yeah, yeah. No, you're not. Yeah, that's good. It's a good advanced project doing all the right things. I agree.
Yeah.
Yeah. Other than that, no, I think like everything you said about us is how I feel about it too. The opportunity is way more beyond what we're just doing right now. There's so much more in the pipeline here that selling the shares now just seems for me. I'm just where did you put that money? Like it's
So
what's better than this right now,
yeah,
and that's how I
so
look
this
at it.
is yeah. So this is being recorded Tuesday, September 23rd, and I'm going to post it today. That's the one
Okay.
good thing about when I do these. I don't. There's no delay. It'll be up in an hour.
All right.
So tomorrow, I would expect it to go up at least 10% if people watch it. We'll see what happens.
All right.
But thanks for being on, Sean. This has been great. And
Yeah, great for me too, Don. I'm glad
are
we
you
were able to
are
reconnect.
you going are you going to be at VRIC? I think we
I
think.
will. Yeah.
I'll see you
Yeah.
there.
Sounds good. Yeah, definitely. All right.
We'll see
Thanks,
you.
Don.
Bye
Take
bye.
care.